Financial markets are at all-time high. At the same time, PE ratios and company valuations are the highest levels that we've seen since the Great Depression. Credit card debt is soaring and savings rates are crashing. It's only a matter of time before financial markets correct. And this correction is either going to create a lot of pain or potentially a lot of opportunity. So, the question is, are you geared up to transform financial lows into wealth-building highs? In this video, I'm going to reveal a dynamic three-step roadmap that will guide you into dissolving your burdensome debt, enhancing your creditworthiness, and amassing a reserve of funds, or an opportunity fund as I call it, that will empower you to capitalize on the financial downturn that I believe we're inevitably going to be seeing sooner than later. Envision yourself snatching up prime investments while others are in fiscal distress. I always love to draw on Warren Buffett's tactic of being greedy while other people are being fearful. I'm going to walk you through pragmatic steps to guard against and prosper from future market dips and recessions. So be sure to watch on to master your monetary fate and learn how to flourish in the face of any economic condition. Let's go. Hey, what's going on, Cashflow hackers? It's Chris with Life 180, and today we are talking about the three-step formula that you need to do to build your opportunity fund and be able to be prepared for what's coming down the pipeline. So, without further ado, let's just jump right into this. I've already told you why this is so important. Step one, it's not going to be a surprise. Dissolve your toxic debt. You got to consider your toxic debt as this weight that's just a drag on your fiscal momentum. This is something that's going to thwart your ability to ascend to the financial peaks that you're looking to reach. I think a lot of times people think about this stuff, but they have a hard time defining what toxic debt is and why it's so destructive. So let's talk about that. Toxic debt consists of loans or credit with steep interest rates that sap your financial strength and hinder your fiscal agility. The typical culprits of toxic debt include credit card balances, predatory payday loans, high interest personal lines of credit, and things of that nature. Such debts come armed with crippling interest rates. This type of debt comes armed with crippling interest rates that traps you in this endless loop of paying the bare minimum, barely cutting into the principal. It's why it's so essential to make sure that you do your best to pay down the toxic debt first. So my suggestion is kickstart your toxic debt elimination utilizing one of these strategies. First strategy is spot and strategize. First thing you do is you tally all your debts and you arrange them by interest rate. Obviously, the higher the interest rate is, the more toxic the debt is with this philosophy, and you want to aggressively address those with the highest interest rates first, paying those down. The next strategy is cash flow indexing. For cash flow indexing, what you want to do is you want to take the amount of the loan and divide it by your monthly payment. Now, I have a lot more content educating on how to follow this strategy, and while it takes a bit more savvy, it's my favorite method and the best when it comes to dealing with cash flow. Keep it simple for this video. The general rule of thumb is you take the monthly payment, divide it by the amount that you owe, and that will give you a cash flow indexing number. If the cash flow indexing number is high, then it's actually a healthier debt. The lower the number, the more toxic the debt. Any loan with a cash flow index number under 50 is what I would consider toxic. And so you want to prioritize the lowest numbers first. Conversely, any debt with a cash flow index above 100 is probably going to be considered not so toxic. In fact, you could actually view it potentially as more of an investment type of debt. So while those are the two types of methods on how to eliminate toxic debt, there are also some actions that you can take. The first one would be rate reduction. If you go through and you engage with your lenders and you discuss lower rates with them, you might be surprised what you're able to accomplish. And you should never underestimate the potential power and impact that a straightforward conversation could potentially have on your wallet. At the end of the day, clearing away this toxic debt not only solidifies your fiscal defenses, but it also liberates your valuable capital for investing during these fiscal downturns that we're talking about. So step two is you want to strengthen and build your credit score. Now, possessing a robust credit score offers you a huge financial edge. It's absolutely your key to favorable loan terms, lower interest payments, and broader economic horizon. So once again, I've got a lot of content on how to build your credit score, but a little summary of this on some of the things that you could do to build your credit rating right now. First, punctual payments. Be on time. Timeliness is not negotiable when it comes to your credit. Late payments are detrimental to your credit score, so you want to make sure when you go look at any credit app that helps you track this. I use Credit Karma. I think it's a great way. It will tell you what your on-time payments are. You want to get that number as close to 100% as possible. You want to optimize your credit card use. To do this, make sure that you maintain your credit card balances well below 30% of your limits. If you eclipse 30%, your score is going to go down. I want to caution you, a lot of times people say, well, I need to get more credit to improve my credit. Well, each credit check can actually dent your score short term. So apply for new credit sparingly and be really judicious about the process and what type of credit you actually apply for. As I mentioned before, I love to use Credit Karma because monitoring your credit, monitoring your payments, and being able to audit your credit report on a monthly basis is absolutely essential. Any challenges you see, any errors on your report that you uncover, make sure you report them and deal with them in as timely a manner as possible. I can't say this more strongly. A better credit score sets you up for superior investment openings, especially when the financial climate is uncertain and credit quality can open doors. Remember, when other people are struggling, their credit's going to go down. And if you can maintain a higher credit score, you're going to be way separated from the pack. All right, so let's get to step 3. You got to amass some liquid capital. I know a lot of people don't like to focus on this. Maybe it feels like the hardest part of everything, but you need to think of liquid capital as your fiscal parachute, ready for deployment at a moment's notice. You need to have readily available funds or equivalents that can be liquidated swiftly. You need to be sure to have readily available funds or the equivalents of those funds that can be liquidated really quickly without penalties or losses. So some of the things that you can do to grow your opportunity fund are automate savings. You can set a fixed transfer from the account, maybe your checking account where you get your deposits of your earnings, into a savings account, which will cultivate your reserves without you having to think about it. Expenditure pruning is absolutely key. Go through, examine your monthly budget, see where you're spending money, and check all of the non-essential items that you're spending money on and just chop them off. Diversify income. Sometimes your greatest need is just more cash flow. Pursue extra revenue streams like freelance gigs or part-time employment so you can build up your reserve capital. It'll be worth it. Here's the bottom line. Your ability to wield liquid capital during these market hardships places you in the captain's seat, and it separates you from the pack. It's going to allow you to snatch up investments that are at deflated prices when other people are having to make poor decisions just to survive. Now, one of my favorite ways to manage amassing this liquid capital account is by utilizing a whole life insurance policy. While a lot of people think of life insurance just as a death benefit, we utilize whole life insurance as a banking alternative. The reality is whole life insurance transcends its conventional reputation as a mere contingency plan. It's also an investment juggernaut under the right circumstances. Let me explain. While you're going through and you're clearing up your debt and you're forming your nest egg, if you utilize whole life insurance as a savings mechanism instead of a traditional savings account, the reality is cash value is going to be accruing within your whole life insurance policy. You can tap into this to be able to help with your debt clearance. You can use whole life insurance to accelerate your debt paydown or even refinance your debt into the policy. In my opinion, this is one of the financial industry's best kept secrets. The cool part about whole life insurance, unlike a savings account, is it has tax efficient wealth accumulation. You're going to enjoy tax sheltered growth and have access to that money tax free through the loans of withdrawals up to cost basis and policy loan. You're also going to have tax efficient wealth accumulation in a whole life policy. Unlike a savings account or a CD where you get taxed on the gains, you have tax sheltered growth inside of a whole life policy because it's going to grow tax free and you're going to have access to the money tax free through policy loans. Your whole life insurance policy is also going to give you an increase in borrowing power. Due to the fact that you're going to be able to access the cash value in your policy through loans, typically loans that are going to be at better rates than the bank, what this is going to do is it's going to reduce your cost of capital and it's going to give you a huge competitive advantage over everybody that you're going against for any type of investment, because since you have a lower rate, it's going to increase your purchasing power, allowing you to spend more to get the same asset. And at the end of the day, I love whole life insurance because it just gives you more serenity about what you're trying to do. I call whole life insurance a self-completing plan. It's the only financial tool in the world that I know that will help you make sure that what you want to happen will happen when you want it to happen, whether you're here to see it or not. Not another asset in the world would do that. So when I look at it from an airplane view and we're talking about this stuff, I think that whole life insurance is just the biggest no-brainer when it comes to operating as an emergency fund and an opportunity fund that we want to utilize in our life to accomplish our financial goals. So to kind of summarize all this, first thing that we want to do is we want to eradicate our toxic debt. We want to liberate ourselves from the compounding and devastating interest rates, that are holding us down, and we want to rejuvenate our process and our ability to have financial success. We need to believe that we have the chance to succeed in this. You got to build your credit score. As you're eradicating that toxic debt, you want to make sure that you're really focused and intentional on strengthening your financial credit score, because by increasing your credit score, it's going to increase your credit worthiness, which is going to increase the rates of loans and your opportunity to have access to capital when you need it most. And then ultimately, you have to cultivate more liquid capital. No matter how you do it, obviously take some of the cash flow you free up when you pay off that toxic debt and save it. I don't know if you have to go out and do a side hustle. Create more cash flow. Save as much as you can and prepare. Build this fund while the market's strong. That way you can capitalize when the market is weak. My belief is you got to take immediate action on this. If you haven't done it, if you're not where you want to be, the bottom line is the measures that I'm talking about are going to arm you for the market swings and position you to outperform amidst anything that's going on in the economy. But there are some things that you want to make sure that you avoid. While you're clearing your debt, make sure that you're not soliciting other high interest loans while you're trying to pay down other debt. This is going to be wildly counterproductive to what you're trying to accomplish. When you're trying to improve your credit, one of the things people do a lot of times, they just try to pay off all their debts. If you've got long-standing, seasoned lines of credit, you want to be very, very cautious about just paying those off, because sometimes paying off really mature lines of credit that you've had for years and years can actually have a negative short-term impact on your credit score. And when it comes to savings and building up your capital fund, it's going to be important to be intentional about what you do with that money, how you save it, where you save it. We've already said you got to have a system to save, but make sure that you, I don't know how to put this, you just abstain from the urge to utilize your opportunity fund for more of the kind of short-term daily wants. Don't tap into it for the little things. You are saving this for big opportunities, and if you do this and you hold strong to this process, it will change your life during the next market correction. Hopefully you found value in this. My only call to action for you right now is make sure you just do something about this. I've got budget forms. You can go down in the link in the description below. I've got some what I call monthly profit loss, like doing a personal P&L every single month, where you can go through and do a complete assessment on your own personal finances and figure out where to trim the fat, how to make things work, where to find financial inefficiencies for yourself, and some of the things that you can do. I'm also a big believer you got to go through and you got to align your money with your values and beliefs. This is one of the reasons people struggle so much, is that you're not sure exactly what your core values are. So you're just kind of reacting. You're not aligning your money with what you actually want to accomplish in this life. So also down below, I will put a link to the Values and Beliefs workbook. Now I'm going to tell you right now that workbook is free. It's something I want to give you, but it's a 13-page process that's probably going to take you 2 to 3 hours to go through. But it's my belief that if you're watching this video and you're still watching it now, this is something that's super important to you. And I really just urge you to go through, do that workbook, and it will literally, whether you work with us or not, whether you do anything else or you watch another video of mine, I promise you, if you go through that workbook, it will change the direction of your financial life and the way that you show up for the people that you love the most. So I hope you found value in this video. If you did, please like it, share it, get it out there to people. I think this is super important. Right now, granted, it's 2024, we're coming up into the elections. I think some people are starting to feel like things are coming around. We're in for this soft landing, but I have a different feel or vibe about what's going on in the world right now. I feel like we're gonna hit a massive correction due to the fact that the economics and all the major economic indicators would tell us that we're going into a recession, and there's not much we can do about it. So unless every major economic indicator in the world that's been right 100% of the time is wrong for the first time in history, well, then I'll be wrong, and I'll take that one. But at the end of the day, I would really encourage you to take this warning seriously and do your due diligence. Put the work in for yourself, put the work in for your family, get your foundation built, and get ready for the next opportunity rather than the crisis. Till next video, have a blessed, inspirational day. We'll talk soon. See ya.